Okay, exercise 1-4 asks us to do some things for Eagle Corporation, and they give us some information. They tell us that the assets at the end of the period are $50,000. We'll need that for the next piece. So let's just write that down while we have it. We're going to need $50,000 for the assets. I believe in taking these numbers while we have them. And they tell us that the liabilities at the end of the period are $27,000. So we'll write that down while we have it. And then it tells us the revenue for the period, tells us the dividends were $3,000. But remember, dividends come out after net income. So we need to skip that for the time being. We have revenue of $14,000. Again, that number is given to us. We're given expenses of $9,000. And the net income, therefore, revenue minus expenses is $5,000. Out of that, we paid the dividends. But we don't really need to worry about that so much because they've given us complete information here. We know the assets are $50,000. We know the liabilities are $27,000. If we just rework the equation a little bit, if we do assets minus liabilities, just pushing that equation around a little bit, that will give us our equity. So we end up with $50,000 minus $27,000 equals $23,000. And that is our equity. So it really wasn't a math problem, it was knowing where the pieces went. First, you needed to know that revenue minus expenses was net income. Then you needed to know that dividends came out of net income. But since they had given us the ending amounts, the dividends were already taken out of there, so we don't need to worry about it. And that's our balance sheet equation.